Good afternoon, everyone, and a happy Friday. I'm really stoked and honored to have every one of you along here. It's building into a very robust community of people who are familiar with this trading plan. And we're not just learning about the plan now, we're actually in the plan and working it. This is really rewarding to see everybody doing so well in our community. Today, I'm going to compare two different chart time frames. I'm going to start out looking at this time frame and compare it to what we're dealing with now through a set of indicators. And then we're going to get to the Bollinger Bands, and I'm going to show you something really unique. Hi, my name is Doug, and I'm the founder of IntroToCryptos.ca. I'm a top-rated Bitcoin technical analyst on YouTube and the author of several books on crypto trading, including The Beginner's Guide to Crypto Trading, How to Overcome Fear and Greed in Bitcoin Trading, and the upcoming Lazy Whale strategy that no one will tell you about. More than just TA and books, we have the proven results to back it up. We are now the top signal provider on Signally. I've helped out thousands of people go from lives of gambling, stress, and drama and transform simple habits to create lives of freedom, possibility, and confidence. And I do the same thing right here in these videos with you. So before we go any further, be sure to hit that subscribe button and the notification bell. First of all, let's start off with the relative strength index and just compare what happened in the relative strength index through these two different periods of time. And what I'm doing here is setting a baseline of where the RSI seems to have bottomed along this area, just as it did back through this period of time back in February of 2019 out of this bottom. Another really important similarity that we can see here is the price pattern making this trend down just before the break higher. As we go through the bull market, we can expect that we're going to come up and up and up, and the RSI is going to top, and come back to this baseline each time as we're going up through our bull wave. So as the RSI gets up to these top ranges, this is when we can expect that we'll watch for it to come back and give us another bottom formation where we can add on to the position. And the RSI is going to be really important for building onto this in a long-term trend right now. As we compare 2019 to the price charts we have now, and I take a look at the on-balance volume, we can see that we went from deep selling to less selling, and then we transitioned to a buying phase while we accumulated even more through this period of time here. Now, as we reflect on what has gone on through this period of time, we see the dumps going on. We see the reduction in the buying going on, and we flipped to negative, just as we saw here. Now, I'm expecting that we are going to flip to positive volume. And as we flip to positive volume, it may be that we make a move up and that we go sideways for a while longer in a positive on-balance volume state as more accumulation is happening. As we get to the Bollinger Band chart, we'll see some really key things to pay attention to if we are going through an uptrend that has stages like this. I would say that through the past 6 weeks of these videos, I've been really talking about the oscillation of the one-day MACD, and that I was expecting the MACD daily would oscillate similar and that we would be going up. Each time it came back, I was anticipating a cross and that we would be going up. Now it has crossed down below the midline and it's sort of hovering sideways, which has given me a little change in the way I'm reading this now, so that it seems more to be matching this chart pattern and that we may be going up for a while sideways yet before we make the big stage up. There are two different ways we can go up through this stage, and we'll take a look at that in the Bollinger Bands in 1 second. But before I get to the Bollinger Bands, I want to look at the difference between the Ichimoku cloud. This gets really clear in the next chart, but we can see here that in the Ichimoku cloud, we were coming up from below. Here, we're coming sideways. The most important part of the Ichimoku cloud isn't whether or not we've come down and in through the cloud, or we've come up and now in through the cloud, but rather, what are we doing as we are transitioning now through this sideways action? This is where it'll show us the way. And finally, here we are to the Bollinger Bands. This is really interesting to see how we transitioned out of February. Very narrow neck before the transition went up. And now we're into the Bollinger Bands. The most important thing, as we're watching the bottom formation here, we can see that the Bollinger Bands were on a downward trend before the breakout started to build itself up. Then we narrowed down for the big, large breakout. So right now we have the downward trending area going on, and we may have that same potential for the prices to make a small move up and then go sideways for more consolidation that'll match what the on-balance volume was showing us. The big difference that I want to highlight here now is the 1, 2, 3 bottom formation is below the 200 period exponential moving average, where this 1, 2, 3 consolidation period is built up above that 200 period exponential moving average. And so I wanted to see where in the chart were we just crossing above that 200 exponential moving average in the past. We can see a consolidation from below it in the past, as we saw. We see consolidations from below, but this consolidation from above might be more important, especially as we're watching how this breakout took off. It was extremely volatile through this period, and then we had a big push down to a Bollinger Band mean reversion trade, and then we went up for the big blast off, which means that we're walking into treacherous sideways water, whether we're looking from the February 2019 scenario or we're looking at the March and April 2016 scenario. Either way, the most similar chart patterns are telling us that we're coming into treacherous water that's going to be very volatile, and any of your long positions that are over leveraged and your stop is too close, it's going to get killed before the market really takes off. One of the most common questions I get is, where do I think prices are going to go to? And I used to spend quite a bit of time doing projections and estimating where prices might go. There are some really cool tools where you can just grab old pieces of the chart from the history and move that over and stick it onto the chart and just imagine, what if it did this? What if it did that? And what would we do then? What would your trading plan tell you to do if you were to trade it this way? Would you get stopped out because you had your stop too close? Are you giving the market enough room to have a pattern like that? And then of course, you've got to play the devil's advocate with yourself and grab another piece of the chart to say, what if it doesn't work out quite as well as I'm wanting from where we are? And it did something like this instead. What would my trading rules tell me to do? How would I play this out if this is what happened? So each of these are possible futures, and there's no way to know. Now, instead of projecting where the trade might go and how long it might take to get there, I've devised a way to break down my trade into 5 different stages. Stage 1 is planning the trade. Stage 2 is when you put on the trade and you're managing your stops. Stage 3 is where you've got the trade to a point that you can put your stop loss above your entry and your risks are protected. From stage 3 on, then I leave it up to the market to decide, when do I get out? Can I add on to this trade? And there are different parts of stage 4 and stage 5 of the trade that give you all of the answers for every different scenario, whether the trade is going up or down, whether it's proved you correct or proved you wrong. All of those things should be answered out ahead of time, like a flow chart of, if this happens, then I do this. If this happens, then I do that. If the other thing happens, then I do this thing. And you can follow along through your flow chart using these different stages of the trade. If you don't understand these different stages of the trade, it's free. Go over to the website. I'm giving away the $299 course right now for free, and it explains these 5 stages of the trade. Stop in, read what other people are saying about this free course, and grab it right now while it's still free. Let's close with an update on the altcoins. We're looking at Bitcoin dominance here, and as Bitcoin dominance is making this little parallel channel, I'm hoping that it is a bear flag and that dominance is going to be dropping sharply from here. At the same time, I've got to acknowledge this is a 1, 2, 3 bottom formation at the end of a downtrend that has been broken. And so if dominance does continue from this 1, 2, 3 formation, it may be going up higher here, and I'll explain why that might happen. If we take a second to watch the shitcoin, the mid-perp, the alt-perp, and the DeFi, decentralized finance perpetual contract, and just reflect on how these contracts are performing versus Bitcoin, we can see the average US dollar of this group of altcoins. We can see the average US dollar of this group of altcoins compared to Bitcoin. right? We can see the average US dollar of the low cap market coins versus Bitcoin. They've been doing very well. What we need to be prepared for in the altcoins right now is that if Bitcoin, the blue coin in the background, starts to go way higher and breaks out and the altcoins stay sideways, this is going to mean that Bitcoin dominance is going to rise. So if the US dollar of Bitcoin goes up while the altcoin US dollar stays the same, then dominance is going to rise and the altcoin versus Bitcoin pairs are going to pull back during that time. So this is a really risky time in the altcoins. Many of the coins are making 1, 2, 3 top formations and consolidations that may be going higher from where they are. But if Bitcoin starts to blast off and the US dollar value of those altcoins stays the same, then the altcoin versus Bitcoin pairs are going to suffer. They're going to pull back. So be careful where your stop losses are in your altcoins. Really important time to see how your trading plan deals with the volatility in the market. Does it have well-tuned shock absorbers that are going to keep you in the game so that you're there for those really big moves, or are you going to get kicked out too soon and then watch the big moves take off without you? These are some really important concerns in the altcoin trading right now. Your diversification and the type of stop loss strategy that you have as we're going up through this bull trend is really going to tell the difference whether you make money in the bull market or you don't make as much money as you could have made in the bull market. I'm really stoked and honored to have every one of you along here. It's building into a very robust community of people who are familiar with this trading plan. And we're not just learning about the plan now, we're actually in the plan and working it. This is really rewarding to see everybody doing so well in our community. If you haven't joined already, be sure to come and check out our Discord channel. You get to know the community, the feel of things, and then you'll get to know more about the products and the services that we offer and how it may help you become a more successful trader. Thanks again for being here. Good luck in all your trading. We'll see you over on Discord.